Beautiful. Yeah. So thanks for coming in tonight. So how do you buy apartment buildings in the next 90 days? I mean, you got pretty much, let's call it rest of September, October, November, December, and then the year's over. But how could you actually locate a deal in the next 90 days that would make financial sense and make 2025 the best year ever for you and get into and start the multifamily game? So let's kind of jump into that. So people ask me pretty often, why multifamily versus flipping houses versus wholesaling versus Airbnbs versus other, flex space, mobile home parks, all of the above, right? Why multifamily specifically versus those? And I would say this, the cool thing about multifamily is that you get paid 5 to 8 times throughout the life cycle of owning the multifamily building. 5 to 8 times, okay? In the beginning, concurrently every month, big pops when you refinance and sell properties, tax benefits, all the above. So 5 to 8 different ways you're getting paid throughout the life cycle of owning a multifamily. That's why it's so powerful. I'm going to go through those ways tonight. Okay, the economies of scale. I had a discussion the other day with a good friend of mine who owns like 12 single family homes and they're rentals. Generally speaking in the same city, but he still has to drive to them all over the place. And he has 12 different roofs, 12 different yards, 12 different individual tenants, or if one moves out of the single family home, you go from 100% occupied to 0 very fast, right? So all of that. And, maintenance to 10 different water heaters, 10 different insurance policies, 10 different mortgages, 10 different this, all right, all the different things of 10 different. And so we kind of went into everything of saying, look, the economies of scale of having one building, whether it's a 10-unit building or a 12-unit building or a 5-unit building, it's one building with the units in it, one location. The economies of scale that come with it from repairs and maintenance, et cetera, okay? Easier to finance. And the reason for that is because commercial loans versus residential loans. Commercial loans are applied to anything on multifamily, specifically 5 units or more. 5 units or more. You can get a commercial loan, which means that the lender's no longer looking at you personally in your personal financials as the main driver as to why or how you get the loan. It is more about the property's financials and can the property substantiate paying us back? Less about you now. And so credit's not nearly as important. The underwriting is not about your tax returns and your financials and your W-2 and all of that. It's more about the property and the property's financials. So that's why financing is easier. And then the generational wealth, something you could very easily pass on. Very easily pass on to family, friends, other people that you involved in and have that generational wealth that's growing for your name and your family. So those are really the main reasons why multifamily is so powerful. The biggest ones are here, right? Economies of scale and the different ways you get paid. So has anybody played this game before? Has anybody kind of given you the presentation about money? How many people in here are in a W-2 position? So you are what is called a contributor, okay? You're a contributor to the United States economy, and that's how the IRS sees you, okay? What is money to you? What is money to you? Is it freedom? Is it choices? Is it time? Is it family? Like, what is money? When you think of the word money, like, what does it mean to you? I'm super curious about that. Because when this presentation was given to me a few years ago, it blew my mind. Because once you understand this, it's going to let you really understand the U.S. economy, understand the IRS, understand taxes, understand why capitalism is in place and the way it's structured the way it is for the United States of America, okay? So cool. It's a tool, it's a vehicle, it's safety, it's freedom, it's choices. Love all those. They're all accurate, all accurate. So this was explained to me. Money is a game. And the reason it's a game is because it is creators and contributors. Creators and contributors. Creators produce products and services into the marketplace. They are business owners and investors, entrepreneurs. They produce products or services to the marketplace of which the contributors come over here and use and purchase and buy. And then the money leaves the pocketbook of the contributors and it goes over to the pocketbook of the creators. And that is the entire United States economy. Creators and contributors. Has this ever been explained to you this way? Because it's amazing when you understand it this way. Okay, so creators and contributors. So our little friends over here, known as the IRS, that we all love, right? The IRS loves creators, does not love contributors. Okay? They're going to give the most tax benefits to the creators. Why? It's because creators move money. Because they move money and they create opportunities, they create jobs, they create things, right? Creators, right? They're business owners, investors, entrepreneurs. They are creating products and services, creating jobs and opportunities into the marketplace. They're moving an enormous amount of money in the US money supply, in the US economy. And by doing that, the IRS wants to promote that more, okay? Because they want taxes on a bigger pie, right? They want taxes on a bigger pie. So they want to entice as much as possible under capitalism to push the creators to make as much money as possible to then get a piece of that bigger pie, okay? They're not doing it because they truly love creators out of the goodness of their heart. They're doing it because they want all the tax benefits going there, right? So they can have all the offset to grow, and then now they're going to get a piece of a much bigger pie. That's why the IRS designs it and does it that way. Over here, you're going to get your basic standard write-offs that you know about, right? Your child tax credit and this credit and that credit and that credit, right? Your basic deductions, but not many. And the reason why is because as a contributor, you're not moving enough money. You're not creating, right? You're just contributing. And that's fine. Nothing wrong with it. You can do extremely well just doing that. But just understand that this financial freedom, this time, all the stuff you're talking about and wanting and desiring, it can't happen here. It's not possible. It's only going to happen truly here. But the question is, how do you do that, right? How do you make that transition? Well, it's no different than I did, right? If you don't know kind of my background, I had started obviously back in 2005, right? Came out of college, I was actually a title rep, right? Working over here, 9-to-5 job, right? As a title rep in the title insurance industry. Ran that right up until the financial crisis, until everything imploded, up until 2008 through 2010. Anybody remember that time? That was a lot of fun, right? Went through that. Then I became an asset manager for a lot of the major banks, doing their REOs and foreclosures for them around the country for about 2 years. All of which time I had my broker's license in real estate. And then we started buying properties, because I went to a friend of mine at that time and I said, listen, man, I'm in real estate. I'm getting clobbered, right? It's the financial crime. I mean, I'm getting clobbered. Watched my dad lose everything. I mean, we're getting hammered, right? So I don't have a lot of cash, but I have the ability, I have the skill set and the knowledge to go find deals, analyze them, put them together, run them, manage all that stuff. I just need access to a capital partner and someone who can help sign on the loans initially until we get going. And he was that partner. That is Christopher Poley in the Brennan Poley Group. That is our capital company. And from there, we started with one condo in 2010, $100,000. And today we have over 600 plus units and $180 million in real estate, right? And we went from one condo to then doing duplexes and fourplexes, and then realized, gosh, the real scale game is leveraging our money with other people's money. So then we got into syndication, where we were doing 25, 30 unit deals. Then we got into 50 to 80 unit deals, now 100 plus unit deals. And that's where we're at today. But that all started in 2010 to where we're at today in 2024. And that is my path. And so I share that because to get to where ultimately I'm trying to get to, which is 10,000 units and $1 billion or more in real estate, which you soon realize in multifamily, it's about partnerships, right? You can start small, which is great, but in order to scale and grow, you need partnerships. You need people coming together, doing things together. That is what it's all about. And that's why we actually created our community. But understanding how this game works and how you can go from contributor to creator, which is what I did, that's how you're going to have the financial freedom. That's how you're going to get there. I want you to decide, and this was actually explained to me not too long ago about, hey, listen, money is a good motivator, but it's only going to get you so far, right? Once you start making money, right, a decent amount of money, you have to have other like stuff in your gut, right, in your belly that really fires you up every day and gets you moving. So I'd like to say, what are your 7 mountains? Pick 3 or 4. 3 or 4. And these are things that move nations and inspire people. Sports and culture, family, media, government, business, education, and religion, right? Sports and culture, family, media, government, business, education, and religion. Which ones when you think about it, don't have to think long. Take 3 or 4 of those. What are most passionate to you? Right? What's most passionate to you? Like get you fired up. Because this is what it's really all about. It's really what it's all about. You're here tonight because you have these passions for stuff outside of what you're doing in your daily life, right? Meaning if you had all the money and you had all this time on your hand, it would probably fall into some of these things that you have passions for, right? You put your time and energy towards. So that is really what you're going for. So I want you to remember that, because to get into multifamily, to do this stuff, to go to where you want to go, these things are going to drive you, okay? These things are going to drive you. So for me, to give you an example, business is one, right? And then media is another one. And then education over here, that's what we're doing this evening, is a third one. And then family over here is a fourth. Because we drive with business because you have to feed, right? You have to have a successful business to feed, right? The media side, which is what we do as well, in the education and helping people grow and creating community and collaboration and partnerships. And then the family, which is part of not only my personal family, but also giving back, leaving a legacy, helping people. There's 3 charities that I give to most. We give to Tunnels to Towers. I'm not sure if you've heard of that one. It's a great one out of New York, started after 9/11. Number 2 is the SEAL Future Foundation. We help transition Navy SEALs, team guys, from team life into civilian life. And then lastly is the disadvantaged children. We're helping grow and help children who are in disadvantaged situations grow and have inspiring lives through mentorship, okay? So remember those 7 mountains, okay? Remember the money game. I need you to like visualize this, because that is why you're here tonight learning about multifamily, because you want to do something. You're clearly here tonight for a reason. So you want to do something. So let's make it happen. So as I mentioned, we created Multifamily Schooled, right? And we did this a few years ago to create a community of well-trained investors around the country who are having success, buying multifamily, partnering, collaborating, all that stuff's happening. Because by doing that, now we can even partner with everybody inside the community and do bigger deals, right? Because some people start small, right? You do your first 5 unit or your 8 unit or your 10 or 20 unit building. And then from there, you're like, okay, I figured this one out. Let's go to a 20, 30, 40 unit building. Well, great, we figured that one out. Now let's go to a 100+ unit building. Well, that's where we can probably partner, okay? That's where we can probably partner, because you're going to need 2, 3 people, right, at the sponsorship level to take a deal down like that. So that's where we love to come in and say, great, now you've executed, we've helped you. Now the community is growing, everybody's winning. This is what it's all about, right? Creating a well-trained community of investors collaborating around the country, because then everybody wins. Everybody's growing, everybody's getting rich. Make sense? So keep your mind on that. Some fun folks inside of it that have been in it, been through it, currently in it, staying active. I love it. So we're having a lot of fun, a lot of success stories. All that stuff's great to kind of watch people. It's really cool. To give you an idea, so I just came back from Texas and met with 2 of our current community mentees that literally they're a week into the community, a week and a half from California. They're looking at Arizona and Texas as their 2 main markets they want to focus on outside of California. And they're gung-ho. They're making it happen. And they know I'm going to be in Texas and San Antonio at some of our deals. They get on a plane and they fly out because San Antonio is one of the markets they're focused on, which I love it. So we meet up yesterday on site at one of our deals, and we're talking shop. We're walking the properties. I'm walking them around, showing them things on how you would execute, right? And they're going to start small. They're looking in San Antonio for somewhere around kind of 10 to 20, 30 unit deals. And they were showing me the 4 properties they walked and talked with brokers. I mean, they're literally executing the plan to a T. And I love it, because it's a go mentality. And that is how you move needles in your life, not sitting back on your hands, waiting for, something to happen. Okay? It doesn't work that way. So community, community, community. I mean, that is literally what just happened in the last 24 hours. So hope you love that. Okay, so let's get into some of the nitty gritty here. How do you buy apartments? Finding, analyzing, financing, closing, and managing. Because it doesn't matter, everybody in here tonight, whether you're buying a duplex, a 2-unit building, or a 100-unit building, okay? It's going to follow the same pattern. You have to know how to find the good deals. How do you analyze them quickly to determine whether or not it's a good deal and what metrics to look at, okay? How do you finance them? How do you capitalize them with debt, equity? How do you structure them? How would it work if you're bringing in investors and stuff? What would that look like and how would you execute? Then how do you close the escrows and how do you manage them? So this is the process of buying apartments. And it doesn't matter whether it's a 2-unit or 100-unit, okay? So looking in on here, I'm going to stop this and share it. Yep, financing and capital, analyzing and finding, all pretty common. The top three. So, just because of that, because of the results you just gave me, okay, this is where we're going to focus. Okay, and I'll briefly touch on these, but we'll leave that later. Find, analyze, finance. Okay, so here we go. So how do you make money? People always ask, well, great, this is all awesome. We love it, Justin. This makes complete sense. But how do you make money in multifamily real estate? Remember, I mentioned 5 to 8 ways? 5 to 8 ways. That's what makes it so amazing. When you flip a house, one way, right? When you wholesale, one way. Airbnb, you get one way, but then you get a second with some profit, hopefully. You get into other types of real estate, depends. But with multifamily, 5 to 8 ways. Here we go. So when you go into the deal, when you put it together, say a 10-unit building or a 20-unit building with you and investors and other people, OPM, other people's money, you get an acquisition fee. It's a one-time acquisition fee at the beginning of the transaction, right when you close escrow. It's typically 2 to 3% of the purchase price. And I'll show you how this works. You get an asset management fee. This is different than property management. Asset management is managing the managers. So as an owner of an apartment building, we manage the property managers that manage the properties. So we are an asset manager. We get an asset management fee paid monthly to us of 1 to 2% of the revenue. 30 to 40% of the cash flow coming out of that property every month. 30 to 40% of the profits, whether you do a refinance and cash money out, or you sell the property down the road, you make a profit. Either way, you're going to get that as a syndicator. 30 to 40% of the tax write-offs. When you do tax benefits and you accelerate this depreciation game and all that stuff in taxes, we won't get into too much detail on that tonight, but when you do that, you're getting all of that. And then on top of that, let's say you're doing renovations on the property, right? You're improving the property through renovation. You're going to get a construction management fee that's built into your construction numbers, paid to you monthly of 5 to 8% of the construction cost. And then on top of that, there is what's called a disposition fee. When you go sell the property down the road, you can get up to typically a 0.5 point to 2 points, 2% of the sales price as a disposition fee for helping sell the asset once you do it down the road as the main owner and the syndicator in the deal. Okay. So that's 7. Let's add on an 8. Sometimes you can just get finder's fee. If you're really good at finding great deals, you can get paid finder's fees. Okay. You can get paid finder's fees. So that's typically a 1% of the purchase price. And then you can get brought into the general partnership, the main part of the deal. And I'm going to break this all down in a few minutes, the main part of the deal. And then there's also a 9th. You can get paid capital fees for raising money for these deals. So if you're part of the general partnership, you can get capital fees of 3% typically of the money that you raise for the deal. So there's all kinds of ways that you're making money in multifamily, guys. All kinds of them. All kinds of them. How does that sound? Give a thumbs up if that sounds cool. And listen, flipping houses is great. We still flip houses. It's great transactional money, and it's 3, 4, 5 months, and it's quick turns. Those are great. But when you're trying to get out of the short-term capital gains, take advantage of taxes, and grow true generational wealth, you take all the money you make from flips and you reposition it and you go buy apartments. And that is how you'll do the Holy Grail. Okay. So that's why you do multifamily. It's the different ways you get paid. So finding deals. Finding deals. How do you find deals? There's only 2 ways. 2 ways that you find deals. You either go direct to the brokers and you leverage them, or you go direct to the sellers and you leverage them. You, since you're more novice and everybody in here is more novice, you're not going to be going direct to seller, especially if you're a W-2 and you have limited time, right? You're going to work 9 to 5. You got to come home. You got the family things. You got stuff to do. Awesome. And then, you know what? You got a side double hustle, baby, to move the needle and get out of the 9 to 5 if that's what you want to do in a certain point in life. Move the needle. No different than I did. I was hustling as a luxury sales agent for 10 years, making very good money. 10 hours a day, come home, family time, kids go to bed at 8. I'm on the computer hustling a few hours a night, finding deals, analyzing deals, making things happen, right? To move the needle in life where at some point you can jump off the cliff and say bye-bye. And now you're into the creator role. You're out of the contributor role and you're into the creator role. And that's where all the financial freedom's at. That's where the time, all the stuff you're dreaming of, it's right there. Okay. So not direct to seller. And why not? Because this takes too much time, capital, and outlay when you're getting started. So I want you to be most efficient with your time because you have limited time. You need to be very efficient with it. Okay. So direct to broker, we're going to leverage the brokers out there in the marketplace that are doing deals, have listings, and we can leverage their on-market deals to get access to their off-market opportunities. Okay, leverage the on to get to the off. And we're going to go through that in just a minute. But direct to brokers. So let's talk about that for a minute. Now that we've decided that direct to broker is the right approach, websites and pre-market. That's really how things are broken up. Okay, you have the websites and pre-market. Only about 40% of the deals. Okay. Has anybody heard of LoopNet, CoStar, Crexy.com? So this is Crexy.com. And this is a deal I just literally picked it up before we came on the air tonight. I'm going to show you this deal just to give you an idea. So how would we, if we were going to go into Tennessee, because this property is in Tennessee, it's a 23 unit in Tennessee. If I was going to go into Tennessee, how would I do it? How would I do it? It is no different than literally Jabril and Haman, who actually are now in the community, just what they happened to do yesterday, coming out to Texas. So this is exactly how they did it. So they went online, discovered the market, San Antonio and Tucson. They said, okay, we're going to focus in on San Antonio. Great. Let's identify a few brokers and a few properties online that we'd like to tour. Right? And this is what we teach. And they came in, they looked at it, they scheduled 4 different tours on properties out there in Texas, flew out, met with me, toured properties while they were on their own, just doing it, met with brokers. Now what's happening is now they're going to start building some relationships with those brokers a little bit. So now they're going to get access to their pre-market deals because the stuff online, the stuff on the websites, okay? The stuff on the websites, I'm going to stop sharing this so I can show you this. The stuff on the websites only accounts for about 40% of the actual available properties in the market. The only reason properties make it to the websites, okay, everybody here, the only reason they make it to the websites I just showed you is when they're overpriced and they didn't sell here. Because the process by which a property goes through to come to market is the broker gets the listing, they get it all prepped and ready, they will distribute it to their pre-market investor group. If no one takes that and says, yeah, that's a great deal, let's go. Okay, if everybody passes on it, then it goes to the websites. So the key is how do you get it here? Because this is the game. These are the deals that actually make good sense. When you underwrite them, they make financial sense. How do you get access to those? Well, you have to leverage the on to get to the off, okay? You leverage the brokers, their on-market inventory. Hey, broker, how you doing? Great. You see that property? Okay, great. I'm going to come tour it. Awesome. Meet you. Shake hands, build a little rapport. Now you start to get access to the pre-market deals because of the rapport you built. Because you go on to the off, on to the off. And that's how you leverage these opportunities and you leverage the connections. No different than they're doing out in Texas, no different than anybody else does, no different than we did when we got started. Leverage the on to get to the off. So where we would have anybody focus, right, that's trying to come in and learn multifamily, where we would have you focus is in the 10 to 30 unit space. Okay, do not be going big. Oh, I'm going to go buy a 50 plus unit deal. No, you're not. You have no chance in hell. You have a better chance trying to go break into the White House. I'm dead serious. Serious. Because no lenders are going to talk to you. No brokers are going to talk to you. No seller is going to deal with you in anything over this space in the beginning when you're just getting started. It's going to be challenging enough, but you can execute this. This is where we keep everybody because we know we can get you to execute that. And that's where everybody starts at, and then they grow. That's where they grow. Okay. Great question coming in. Is the on market the website, in the off market the broker? That's correct. That's correct. The on market are the websites. The off market are the brokers from the websites. Okay. To give you a perfect example, TP King is, let me go ahead and share this again. So I'd call it Mr. Austin. You see the broker down here on the bottom left? Austin and Sam. Hey, Austin, how you doing? This is Justin Brennan with the Brennan Pulley Group. How you doing today? Great. Awesome. Hey, I'm looking at your property here on Melrose Court, the 23 units. Awesome. Yeah, just came on the market. How are you guys setting up tours? Are you guys doing them in group tours? Are they private tours? How are you doing it? Okay, great. Tell me a little bit about the property. Any activity, how long they owned it, why are they selling, stuff like that. Some basic questions. There's a lot of them that we give people, but just going through some basics. Okay, awesome. Look, I'm going to be out there. I'm touring a few deals out in the Tennessee market next week. I'm going to be coming out there. I'd like to set up a time to tour this property, meet you, and take a look at the property. Sound good? Awesome. Okay, great. Boom. So obviously there's a little more nuance in that conversation, but you get the point. Because now I don't care if the deal doesn't make sense. It's irrelevant. Okay, it's a lure. Because now I get to meet Austin. I get to meet Sam. And what do you think I'm going to do when I'm meeting Sam and Austin? Hey, nice to meet you. Build a little rapport. So that way, look, Sam, I already underwrote this deal. I know they want $1.4 million. It's worth $1.2 million. I don't know if they'd sell it. No, they won't sell it for that. Great. Okay, look, the deal's probably not going to make sense, but we're buying in the market. We're going to buy. So do you have any stuff coming to market that's not on market yet, Austin? Oh, okay. Can I get on your email list? Perfect. So when you have some stuff to your pre-market investor database, I'd love to be included on that. Thank you so much for your time. Go. Next. Make sense? Because that's how you're going to start the process. And then you're going to start getting fed pre-market deals. Does that make sense now? Now, what makes up a good deal? It's kind of getting into the analyzation part, right? Annual returns of 14 to 20% a year. Cash on cash returns of 6 to 10 or more per year. Equity multiples, that's what EM stands for. Equity multiple of 1.8 or more. So listen, there's lots of metrics. We have deal analyzers that take care of all this. It's all very plug and play, very simple. But these are the metrics that you'd be looking at and say, okay, what is the annual return on the property? What is the cash on cash? What is the equity multiple? Okay, great. They meet all of those. Deal probably makes sense. Let's move forward. Let's look in deeper on it. Okay. So those are the kind of high level metrics you start with, and then you dive deeper. Okay. Awesome. So let's analyze a deal. The most important number is what's called NOI, net operating income. Net operating income. Okay, so it is the number before you pay your mortgage. It's after your expenses, but before your mortgage. Okay, I'm going to show you that. Okay, so net operating income is the number before your mortgage, but after your expenses, because mortgage is not an expense, right? It's not an expense, and I'll break that down for you. But really cool to see this. The power of net operating income, okay? Because what this goes into is how you add value to a building, to an apartment complex. You boost the NOI. The higher you get the NOI, the higher that value of the property is. It's not about a comparable number anymore. It's about how well you can perform that asset, okay? So for an example, power of net operating income. For every $1,000 a month, I can boost the net operating income. I add $220,000 in value to that building. For every $1,000 a month, I can add to the net operating income. I add $220,000 to the value of the building. How does that work? Give you an example. Let's say I boosted $1,000 a month. That's $12,000 a year. You divide that by what's called a capitalization rate. Don't worry about that for now. That gives me right around that number. So for every $1,000 I can boost it per month, $220,000 in value. If you want to add value, you push the NOI. It's that simple. Okay, that is the entire game. And so that's why they have this formula over here, right? The value equals net operating income divided by the capitalization rate. That's your, and if you know 2 of the 3, you can figure out the third. Okay? So I'm going to move on from this. Any questions on that? Yeah, cap rate is basically the cash return in the marketplace that properties without leverage, without a debt, a loan on it, will provide. So if it's a 6% cap rate, that means if I bought this property cash with no leverage, this is the annual rate of return I would get on it. Okay, that's a cap rate. Now, brokers help with that. The market helps with that. I'm not going to get into that at the moment, but that's what a capitalization rate is, okay? First of all, these are all things you learn in the community. So obviously, I only have an hour and some change tonight. We're probably going to go a little over about 15 minutes, but hold on with me. But obviously, there's a lot of the stuff you learn if you come into the community, okay? So raising money. Raising money. How do you raise money? Well, money is broken into 2 sectors. debt, which is the loan, your mortgage, and then the equity, which is your down payment into the deal, okay? And there's things called what's called a capital stack. So that all that's doing is showing you how the capital stacks in the deal. So your loan is typically 65 to 70%, 65 to 70% of the value. And then the difference, right, 30 to 35% is the down payment. No different if you're buying a house, same thing, but it's showing you the capital stack in the deal. So equity, how does equity come into a deal? We know how debt comes into a deal, but how does equity come into a deal? Well, there's creative financing, meaning the seller can help you finance it. There's also investors, that's OPM, other people's money. Because I hear the concept from people like limiting beliefs a lot of times. They're scared of raising money. And like you have to understand anything in life, if you want to become a creator and out of the contributor world, you have to learn how to raise money. I don't care what you're doing. You start a business, raise money. You do apartments, raise money. Raise money. It is a skill set that you're going to learn, and that's part of the entire community aspect, okay? So creative financing, investors, OPM, your money, private lenders, partnerships. That is how the equity comes into deals. So don't ever allow money to stop you. Sometimes people hear price and they like deer in headlights. Listen, if you can get a deal and get into it and leverage your net worth and become a multimillionaire and all these things that can happen, and you stop with the concept of like, I can't raise money, I don't want to deal with money, don't worry about that. Don't let the money ever stop you in anything. Right? A lot of people stop themselves before they even get started on that, okay? So that's how the equity happens. Let's keep moving. So let's take an example deal, the one that I was showing you. So this is the one that I was showing you. Okay, a little 23-unit deal in Tennessee. 23-unit deal in Tennessee. I'm going to break the deal down for you and show you how you would finance it and how you would structure it legally, okay? So I just pulled this. I'm going to take, obviously they're asking $1.4 million. It's not worth that. It's not worth that, but it's okay. It's not the point. So let's take this little 23-unit deal and break it down. Let's say we buy it for $1.3 million, which we're probably going to buy it less than that, but let's say it's $1.3 million. Okay, 23-unit deal. So let's move up. So $1.3 million for the price. Then we have $100,000 in closing costs. And then we're going to renovate the property, okay, with maybe $8,000, $9,000 per unit, $200,000 in renovation costs. So we're all in, if you calculate that up, at $1.6 million, okay? So now how do we structure the deal? Break this down for you so you can follow me here. So $1.6 million total cost. We're going to go out and get about a 75%, called loan to cost. Okay, loan to cost, $1.2 million of that $1.6 million is going to be a loan. Easier to get that loan than a $300,000 house loan. Remember we were talking about the benefits of multifamily? One of them being the financing. Because the bank's going to look at this property and they're going to make sure the property's financials substantiate this $1.2 million loan, not you. Right? They're going to say, does the property substantiate paying us every month? Yes or no? Great. Here's the money. As long as you're not a fraud, good chance you're getting the money. Okay? So that's the $1.2 million loan, 75% loan to cost. Then $400,000 in down payment. That's the equity side. Well, you may be saying, well, Justin, I don't have 400 grand. I know you don't. And so maybe some of you do. But if you don't, like most people, this is how you leverage your money in conjunction with OPM, other people's money, and go take control of a 23-unit apartment building and take your net worth into the millions. And this is how you're going to do it. And I'm going to show you. So let's keep going. So here we go. This is how you structure it. So the $400,000, how does that break down? You, as the sponsor, general partner coming into the deal and putting it together, you're going to bring in about 10% of the money. That's about $40,000. Then this $360,000, as we said, can come from a multitude of sources. Could be creative financing, seller financing, could be OPM, other people's money, could be partnerships, could be you could do private lender, all kinds of other ways to do it. We talked about that. But that's how this other money is going to get raised right here. So 40,000 comes from you, that's 10%. 360, the 90% is all the other items we discussed. And we get into how you put that together and how you structure it. So don't overwhelm your mind with that at the moment, but it can be done, and it's done all the time. So the cool thing about it, remember I said the 5 to 8 ways that you get paid? Remember that 5 to 8 ways you get paid? What's way number 1? Acquisition fees. So by putting this deal together, I'm bringing in 40 grand, but literally at the close of escrow, I'm getting a 2% acquisition fee. I'm getting $26,000. That's based on the purchase price of $1.3 million times 2% gets me that number. So what is my real out of pocket? What's my real out of pocket? If I brought in 40, I'm getting 26 immediately. I'm actually only out of pocket 14,000. So think about this for a minute. You're going to have control, voting control, rights, decision-making over a 23-unit apartment building for $14,000 out of pocket. Think about this for a minute. How cool this gets. And we're just getting started. It gets a lot better. So that's 26 grand there. Okay. So now this is how you're going to finance the deal. Any questions on this before I move on? Because I want to keep moving here. So that way I don't take up too much of people's time and I'm respectful of your time. Which role gets the acquisition fee? The general partner, of which that's you. That's you. You own the property. Correct. You and the investors. There's a structure in there that I'm going to get into in just a minute. What's the 10%? That's 40,000. That's your contribution into the deal. Okay. That's your contribution into the deal. That 40,000, that 10% is your contribution into the deal. The rest comes from OPM, other people's money. Okay. Awesome. Okay. Let me keep moving. Because now I'm going to show you the structure, the actual legal structure of that deal. Okay. So that property, we'd have the address LLC, right? The property is going to have its own single purpose entity. So now that's going to be split up between me or you, in this case, the general partner. You're bringing in, remember, 10% of the money. And for that, you're going to get 30% of the deal. For bringing in 10% of the money, you get 30% of the deal. That's pretty typical. There's different splits and systems, but for the simple sake today, 30%. Okay. 90% of the money is coming in from other things, other people, other sources. And for that, they're getting 70% of the deal. They're getting 70% of the deal for bringing in 90% of the money. You're getting 30% of the deal for bringing in 10% of the money. But it gets even cooler. So follow me. So let's say you brought in 5 different investors, 5 different people, maybe some seller financing, some different ways to structure the deal. Okay? And they bring in the capital. And then here's the cool thing, because you're the general partner, your money actually invests right alongside your investors. So not only do you get this, but then you also get the exact same benefits as your investors. You get your percentage of it over here as well. You get to do what's called double dip. You get the general partnership side and the control and the 30% kind of promote, as they would call it. And then on top of that, you get this side of it too, and your percentage of it over here. Super cool. And this is how you get rich. This is very normal. This is not anything strange or weird or abnormal. If there's anybody on here that understands this already, you understand this exactly how it's done. Okay. Now, on top of that, here's all the cool things that you're going to get as the general partner in the deal. You're going to get that acquisition fee we already talked about. You're going to get an asset management fee based on revenue of 1%. You're going to get 30%, remember, 30% of all the cash flow, 30% of all the profits. You're also going to get an 8% preferred return on your 40 grand, because that comes over here. That's what the benefits of here are. Then on top of that, you're going to get your percentage of this 70% over here too, on top of that. So there's just a litany list of ways. You're just getting money all over the place as the general partner. That's why you do it. That's why you work so hard to do this. Otherwise, just give your money passively and just sit back. You can do that too. But if you want to get rich, that's why you play the GP game, right? If you do well, you got to think about it. So I'm going to work hard. I'm going to produce great results. And by producing great results for myself and the investors, I get paid well. I mean, you are literally in alignment because you don't get paid well if you don't produce. If you produce well and you do a great job, you get paid handsomely. I was talking about this with another guy the other day, and he said to me, he says, Justin, your income in life is directly related to the problems that you solve. Think about that for a minute. Makes complete sense. A brain surgeon, right, solves big problems, gets paid a lot of money. Hedge fund manager solves big problems for investors, big money. Multifamily syndicator and general partner, you're solving big problems for people who want to invest in real estate, want to get a healthy return, and do it with someone that they like and trust. If you produce great results, you get paid beautifully and a lot of money. If you produce crappy results, you get paid crappy. It's real simple. It's real simple, but that is the beauty of it, okay? Any questions on the structure before I move on? So Adam, 8%. So these are just kind of some little benefits. I can't dive too much into it tonight, but the benefits for a limited partner, your investors, is they get 70% of the deal and they get an 8% preferred return on their money before there's any profit splits. So that's what a preferred return is. But I'm not going to dive too crazy into that tonight. We could spend an hour on that, okay? Yes, Adam, you have all the legal documents and everything on the structure, 100%, because you're doing what's called a syndication. So there's syndication documents, legal documents that break this all down. So in the community, right, when people come in and join the community, they get access to all of it. So that's not a problem. Very, very common and very normal. That's correct. If you have a holding company, your holding company LLC will have, so your LLC will be over here. It'll own the 30% in the property. That's correct. So your LLC, your holding company, will have the ownership interest in the property. That's correct. Awesome. Yeah, so we got to, an Inc. is not liability protection for you, Patrick. That's why you wouldn't do it. Yeah, you wouldn't do it. First of all, the banks wouldn't let you, and you wouldn't do it because it's bad liability protection. Yeah. So closing the deals. I'm not going to, like I said, I'm going to run through these, but closing the deals, inspections, legal, finance, and renovations. These are like the things you focus on when you're closing a deal. But I remember I told you of the 5 different processes and pillars that we take people through. We're going to focus really just on finding, analyzing, and financing. So we've gone through all 3 of those this evening. On the closing side, if you have to close a deal, you're going to do inspections on the property, deal with the legal stuff you just talked about, Adam and Patrick, the financing, and the renovations. And then managing. So, okay, great. I own this asset. What do I do with it? How do I manage it? Do I do third party and hire a property manager, or do I manage it myself and in-house? Well, you can do both. You can do both. We started managing our own properties, and then now we outsource and have third-party property management companies manage the deals, especially if they're out of state. If you're investing out of state from where you're at, depending on your market, hire a third-party property manager. So we go through the process of how do you hire good ones? What questions do you ask? What do you say? How do you do it? How do you do all of this, right? There's a lot of nuance, but that's why you learn it. It's an extremely valuable skill set to bring deals together and know all of how this works. Extremely valuable, even if you don't have any money, right? Because in the beginning, remember, going back to how we started, I didn't have any money. I was getting my ass handed to me in the financial crisis, but I just knew we had to buy property. Like I knew we had to buy property. So I went to Chris, who was in the tech industry, not directly connected, right? So he still had access to capital and he had the ability to sign on some loans in the beginning of our partnership. So we partnered, then we went out and we started buying deals. I found them, I analyzed them, I put them together, structured them, did like literally everything. And that was extremely valuable to Chris, who wanted to be in real estate. He wanted to be in real estate. He just didn't have a trusted person to do it, and he couldn't do it himself. So it was a great yin and yang. So that's something to consider as well, okay? So property management. So you want third-party property management. So we show people how to do it, show people the questions, how to hire them, how to run it, how to property manage deals once you own them. It's very, very important, okay? Okay, so now I'm going to give you a little case study on a 31-unit deal that I bought with our team, okay? And kind of break it down how $18,000, literally I had $18,500 out of pocket. And I'm going to show you the amount of money I made on that. It's 18,000 bucks. Here you go. So this was a 31 unit deal in Kansas City, Missouri. We bought the deal for $1,525,000. Then we put in about $400,000 in renovation. We had closing costs of about $225,000. So we were all in at $2.15 million, all in. Remember I talked about the loans and stuff? So we got a 70% loan to cost on that thing of about $1.5 million. Then we raised about $650,000 in equity. Okay, and we did that from investors. So with that, I brought in 10%, about 64 grand, right? Just like the last example. Raised about 90% of it through OPM, other people's money, and some other investors and people we knew. Right? I got an acquisition fee of about $45,000, about 3%. Let me double check on that. Pretty sure. Yeah, technically $45,750, but simple math. Okay, so you take that out of that, and it was about $18,000 out of pocket. Right? And now I had control and ownership. Right? And we did a 60-40 split, by the way, on this deal. So we got 40%. Investors got 60%. So for $18,000 out of pocket, had 40% of the deal, plus my money that we put in was invested alongside the investors and all the stuff I just showed you. That exact same structure. Okay? So to kind of show you the money that was made. So what did I get out of it? So we took the value of that property. We bought it for $1,525,000. Through the renovations, we got the value up to about $3.6 million. 24 months later, we did a literal 100% cash out. We refinanced the property, put a new loan on it because now the value is $3.6 million. So now we could put on almost a $2 million plus loan on it. We pulled all of our equity out of that deal. So now we're literally playing with house money. Okay, so all the money came back out. Plus I'm getting a 1% asset management fee, plus 40% of the profits and cash flow, about $2,000 a month. $2,000 a month on that thing for 5 years. Okay, for 5 years. So that was $120,000. Then the net profits from the sale were another $470,000. So I made about just under $600,000 on $18,000 out of pocket on that deal. And this doesn't even include the tax write-offs. This is just the actual money. I mean, if you could learn how to do this and execute this, and this is not like a one-time thing. This is normal multifamily. It's an amazing thing, but I always tell people you have to have one of the two. You either have to have the money and access to it, or you have to have the skills and the knowledge, right? If you have both, you're like a ninja, right? You're lethal, because if you can execute this and you have capital, sky's the limit. But a lot of times people have one or the other, right? They don't have a lot of money, so then they need to hone their skills. They need to get knowledgeable. They need to learn. They need to come in and become extremely valuable for some people with money. Because whether you have the money or not, if you had the knowledge, if you literally could download my brain into your brain today, and you could go find somebody with some capital if you don't have any, right? Now you can go execute this. You're extremely valuable to that person who wants to get into real estate. No different than my partner did 15 years ago. He just needed a trusted source that could go execute, find, analyze, right? You close on deals, finance them, put them, manage the whole deal. I was extremely valuable, and vice versa, he to me. Because of that, we created our company, Brennan Group. And now 15 plus years later, here we are. Went from one condo, $100,000, to now 600 plus units and $180 million in assets. That's how you do it. And we're going to 10,000 units and $1 billion. So it's just a matter of how do you do that? Through partnerships, collaboration, community. That's why Multifamily School was created. That's why we're all doing deals with our partners and students and mentees and all that stuff, because that is the collaboration that happens. That's how you grow. You do not do it alone. You do not do it alone. So this is really cool once you understand it. Okay, it's really cool once you understand it. So kind of back to the community concept. If anybody has interest in it and wants to kind of say, hey, I want to learn this stuff. I want to get into a community, then I want to collaborate and partner and learn and have people doing things together and doing it around the country. If that's of interest to you, awesome. I mean, we have that. So what I'd like to do is if anybody has interest in that, privately in the chat, okay, put your name, email, and phone number. Don't send it out to everybody. If you want to learn more about the community and all this stuff, put it in there. I'm going to run through some basics on what it is. And then that way you know about it. And then we can set up a basic little informational call and you can learn about it. Totally up to you. Okay. But put in, and I'm going to open it up to Q&A here in just a minute. But put your name, email, and phone number privately to host and panelist. That way we can set up an informational call. Okay. But just to kind of give you an idea of what's in the community. When you come in, it's lifetime access. You get live weekly coaching, and it's with me, not some hired coaches, not random people that aren't doing deals. It's with me in a very small setting of kind of 4 to 5 other investors where you're learning from them. You're seeing them do deals. If you're not doing them yet, everybody's collaborating, Q&A, real live interaction. It's very intimate. It's very important because that's how you get the hand holding. Community to partner. Like I said, it's all about the collaboration and partnerships and community. It's where it's all at. Asking questions, partnering on the finance and everything in there. So some big things that we've done recently in the back end of the community is we've added our lending partners that we've done deals with around the country, because one roadblock for people is when they get to the capital financing side. Great, I found deals, I've analyzed them. How do I finance them? Well, we put our lenders in the back end. You can submit deals to the lenders and they can help provide the financing for any deal anywhere in the country if you choose, right there. And the collaboration on equity, partnerships, the cash, down payments, all that stuff in the back end of the community. It's a very powerful tool. So that's Success Coach. So not only me, but you're going to get assigned a Success Coach in the back end of the community for you. All the resources and tools. We have a massive library of everything you can possibly fathom. You were talking about some of the legal documents. You were talking about pitch decks, deal analyzers, due diligence checklist. I mean, anything you can fathom you're ever going to need to buy an apartment, we have in the back end library. So you get full access to it for life. Okay. So we assist you in finding, analyzing, funding, closing, and managing apartment deals. And our kind of promise to anybody coming in is that we're going to help locate a deal alongside you within 90 days that makes financial sense, or you don't have to pay. You can request a refund. Okay. So there is a cost to the community, right? But we want to kind of put our money where our mouth is, show you what we're doing, sign a guarantee to that makes financial sense for everybody, and let's rock and roll. So if anybody's interested, and I'll kind of just lay it out there straight up. So normally, just FYI, normally this thing is $8,800, right? That's the normal cost of the community and the mentorship and everything that we do. What we do typically for people here on the mentor or on the webinar is we'll knock $1,000 off. But this has to come pretty quickly from the mentorship and inside the webinar. So that's why I ask, if you have interest in just learning more, great. Drop your name and phone number and email privately to us. And then I'm going to give you a link real quick so everybody can kind of take a look at that. And you can book an informational call. Okay. I'll put that out there. And then Kevin and Shai, if you can help with that. So that way people have questions and they want to learn more, right? But we don't try and hide from things or be weird or, strange or any of that stuff. We just lay it out because we know what we're building and we know it's extremely powerful. Our intent is incredible, which is what I love about it, because we're building community, we're building partnerships. Everybody's winning together because that's what it's all about. That's how I'm going to get to where I want to go. That's how hopefully you're going to get to where you want to go, is through the collaboration, community, and partnerships, right? And that's everything in here. The details on this, because I know I kind of wrote it up here sloppy. If you want the actual details, it's on this link. It's on that link I just shared. So there's the link to book an informational call. That's there too. And then the link for all the information I'm writing up here. So if you want to watch some videos, learn more about me, learn more about everything that's included, any of that stuff, it's right there on that link. Don't book your call from that link, the one that says multifamilyschool.com/mentorship-LP. Don't book your call from that one. Book it from the other link, because that's going to be more of a private call so we can go through things, okay? So I want to open it up to Q&A. Yeah, I'm glad I started 15 years ago. But Adam, it's never too late. Okay, just so everybody knows what's coming in the markets. Does anybody want to know what's coming in the markets? Would you like your crystal ball? Okay. So if anybody's been following, and we're in kind of a really strange economy, because in some aspects it's doing well. Other aspects, we're in a big problem. So the capital markets, in terms of commercial real estate capital markets, when the Federal Reserve back in 2022 in March decided to jack the interest rates, as we all watched them, right, over an 9-month period, jack them 11 times. It is, now they've been holding it all the way until now, and they're just hopefully getting ready to drop them a bit. It has put such an enormous amount of stress on the commercial marketplace, specifically commercial real estate, and specifically office and multifamily, to where there is hundreds of billions of dollars in potential bad debt on the books of a lot of these banks that is going to have to be dealt with, hopefully dealt with, because if they just let it go and let it go bad, if you thought 2008 was bad, get your big boy pants on, because things are about to get real gnarly, okay? So that's what's potentially out there, but that also lends itself to an incredible opportunity. And we're seeing it now, which is why we're out there picking stuff up. We have a $25 million fund, and that fund is going out there, going after stressed multifamily deals right now, because it's there. It's absolutely there. And we're going out, taking a look and trying to pick off some of these deals where you get syndicators who got into bad positions a couple of years ago and can't refi, can't get out of the deals, stuck in them, and they need an exit. We can come in and kind of be the savior, the hero. Take them out and at least avoid a foreclosure, right? They may not get any equity back, but at least avoid a foreclosure, okay? So that's what's going on in the market. It's a wild, tough time, but it's also an incredible opportunity. If you get in now, you learn and you begin to execute now. Because if you're waiting until the right time, best of luck. You're going to be waiting until you're dead, okay? My biggest fear is getting on my deathbed at 80 years old. This is what drives me every day, everybody. Getting on my deathbed at 80 years old, having to have a conversation with my 40-year-old self, saying, Justin, I'm sorry. I'm sorry I didn't go for it. I knew I had the skills. I knew I had the opportunity. I had everything in front of me, and I just didn't go for it because of fear. Fear of the unknown, fear of losing money, fear of making a bad decision, fear of an investment, fear of this, fear of that. All this fear that's in our brains. It's limiting belief systems. It's limiting belief system. And the only thing keeping you from where you're at and where you want to go is the 7 inches between your ears, right? It's right here. It's right here, okay? So to jump on to Miranda's question, because she left a great Q&A in here, and then we can kind of finish up, and I'll go through as many Q&As as we can. The refinance, she's talking about the refinance after 24 months. Why we 5X on the rents? We're talking about 2 to 5 years for the 590. No. So let me show you real quick how that breaks down real quick so you can understand that, okay? So let's go back. Right here. So we held this property, right, for 5 years. We refinanced it after we renovated it because the value was way up. Okay, so we took it from $1,525,000 to $3.6 million. So now we could go out, okay, and put a loan on that thing for 70% of its value and pull out all of our cash. And when you pull that cash out, by the way, it's tax-free money. So now we take that cash and we go buy more properties. This is how you leverage and move capital. Remember movement of money? Literally, it all goes back to, remember when I said the IRS rewards you if you move a bunch of money? Awesome. Refinance the property, pull out a bunch of money. I'm moving money. Now the IRS is going to allow me to do that tax-free. Why? Because they want me to get rich. Why? Because they want to take more later. That's the entire goal. So by that, that's why you do it. Because now I can take that tax-free money like we did, and we went out and we did a bunch of other stuff with it. So that was part of it. And so we're talking about 2 to 5 years for the 500. Yes, correct. So actually 5 years, by the way, for the 590,000. That's right. On $18,000 out of pocket. Okay, but keep in mind, you're getting cash flow, distributions, asset management fees, all that stuff's happening over the course of the 5 years. So it's not like you're waiting to the end. You're getting money throughout the entire process. Okay, make sense? Just coming in here. Yep, well, no, I think, yeah, it is tomorrow on whether the rate cuts are happening. I'm pretty confident we're going to get a 1/4 point. We'll see, but it may be Armageddon if they don't. I'm just saying it. Balloon is coming to the end. Miranda, when you say balloon on the economy, yes and no. See, they always find a way to deal with it because the problem is so big, Miranda, that they have to. It's like a too big to fail thing. So I'm not that concerned per se. I'm more concerned with, I guess, debt problems, right? More than I am the problems that are currently on the books of the banks. Because they'll work through that. They have no choice. They have to. But listen, in moments of suffering, greatness is born. I want you to remember that. In moments of suffering, greatness is born. Seriously, in moments of suffering, greatness is born. There's always great opportunities that come out of tough situations. So no matter what happens, real estate is always good. It's always good. Just what side of the coin are you playing, right? Now is a great opportunity to get in, learn it, begin to execute, because when it does roll, anybody can make money in good markets, guys. Anyone can. If you can make money right now when it's a tough market, rock and roll. You're going to be a superstar. And that's how you do it. Yeah, the post there. Any other questions? Yeah, so it will let you download it. It already gave it to you. It probably does want you to book a call as well. Don't worry about that. But you probably were able to download it. So once you filled out the information on the form for the toolkit, the free toolkit we put out, then it's going to send it to your email. So just look in your email for likely spam. Look in the spam from Multifamily Schooled. You'll see your download in there. It's going to give you login instructions to the back end. Okay. And we could also send a password reset. We can do that too. So cool. Any other questions? Any other questions? So just to kind of touch back on it when you come on for your informational call on what the community and the mentorship and all that stuff is. It's all this stuff: lifetime access, live weekly coaching with me, the community and the partnerships, Q&A, financing, all that stuff on the back end. You're getting a success coach assigned to you personally, all the resources and tools. Then we assist you along, holding your hand, guiding you through the process of finding, analyzing, funding, closing, and managing deals. Normally this thing is $8,800, but like I said, it's $7,800 for everybody that's on this webinar, which is why we had you put your name and email and stuff so we can actually track it. So that way, if you decide to come in, you get the special. And that's typically how we do it. If it's not on here, then people pay the $8,800, just FYI. So, but we try and be very straightforward. So that way you're not having to guess and wonder and stuff, but it's a lot of value. It's incredible and people are loving it. So hope you consider it and just learn some more information. Any other questions before we kind of sign off here tonight? I hope it was super interesting and how everybody learned from it. Because really what we went over is these steps. Okay, to kind of summarize on it, it's this. How do you buy an apartment building? You got to know how to find them. This is an extremely valuable skill set. And remember when I said that your income is equivalent to the problems that you solve? If you can learn this stuff, regardless of your capital position, and you become very valuable to somebody that has money, you can execute this. No different than I did at the time in 2008, 2010. I was getting my butt kicked. I didn't have money. My partner who I connected with, a friend, he did. I brought the skills. He brought the money. Boom. One condo, 600 plus units, 180 million bucks. I mean, that's how you do it. And if you want to learn how to do that and execute too, that's what the community is all about. Okay. Do investors that you raise money from need to be accredited investors? No. No, they do not. There are two types. There are two types of investments. No, granted, it's probably a bit much for tonight, but I'll kind of breeze you through it. You have what's called a 506B and a 506C offering. So when you raise money, you use one of these two. So here you do not need accredited investors. Here you do. And that's, once again, great detail on that, but we go into that and all the mentoring, the community, everything in great detail on how that all works. And then we hold your hand as you go through it, literally. Okay. So two questions. So Namaju asked about Section 8. I had this question actually come up from one of our mentees yesterday on site at one of our properties. And he says, well, what do you think about Section 8? Should we do it? My short answer is no. It's not worth the headache. And let me explain why. that's a business model. And there are people that are in that industry and they're fine. You have to be very, very, very careful, because with Section 8 comes a certain mentality, and you just got to screen the heck out of them. And even when you do that, a lot of things are going to go wrong. On one of our properties, just to give you an idea, we took over a property a couple of years ago that had 40% of the building was Section 8. They borderline burnt the building down. I mean, it's just, if you want to go through the headache of Section 8, cool, because you think you're getting some government guarantees and stuff. It has its pros and cons. I believe the cons outweigh the pros. And that's my personal opinion and experience of just watching it happen with a lot of people. Because it sounds great. Oh, great, the government's going to guarantee my rent checks. Well, unfortunately, that means that the personalities and the demographics and stuff that come with that, get ready. That's all. Get ready. Adam asked, where does the acquisition fee come from? Does it come out of the renovation money? No, it comes out of the closing cost. So Adam, great question. Normally I do touch on that, but in this case I forgot. So that's a great call. Great call. So let me show you. So your acquisition fee is built into your closing costs right here. Okay, right there. So your $26,000 acquisition fee is built into the total cost of the project going in the door. That's correct. Yeah, because remember, I sectioned it all together. Your total cost is right here. Purchase price, closing cost, rent out. So your total cost is there, right? Then you're going to go out and get a loan. Your loan is going to help fund some of the renovation as well, but so is your equity. Because you have $1.6 million here. That's the total uses, right? Total uses of the money, total sources of the money. Sources, uses. Yeah, beautiful, Miranda. Great question. What if I need help analyzing the deals? That's what we help you do. So no different than people are doing now when they come into the community. We give them the deal analyzers. So we give you the deal analyzers. Okay, they're great. We give you 2 of them. And simple one we give you first, because that one's going to get you through kind of your first few deals. But anytime you're reviewing a deal, you send those numbers in the back end of the system right to our team. We help you analyze those deals and give you some insights to make sure you're using the performance correctly and you're looking at the right numbers. So that way you can make good offers. So we don't let you do it alone. When you're learning it, we're hands-on. So when I talk about coming in, like we're helping you review your numbers. When you go into the closing process to close the deal, we're helping you review some of your inspection stuff. We're here for a lot of Q&As. You go through that closing process, on and on and on and on. The financing side, we've literally hand cherry-picked 3 lenders that we put in the back end of our community. So that way, if you have deals, you can submit it right to them. You don't have to go finding lenders all over the place. So we help you in the back end of that process. So all of that, when I talk about hand-holding, I mean hand-holding, because anybody that's getting into this space, which, listen, let's be honest, it has some complexities, but that's okay. With that comes amazing rewards. It's worth it, but you need good hand-holding as you go through it. Otherwise, you're going to make mistakes. We're here to help you avoid that. That's why you're in it, okay? Great questions. What are your 7 mountains? Okay, what is the stuff inside your belly to get you going? Because money's a great motivator to get you started, and all this hype of what you can do in multifamily, that's great. Awesome motivator. But when things get a little tough or you're not motivated sometimes, it's these things in the view and the picture and the belief in these things that are going to move you. So for me, having a successful business, which we have, moving that into education and media, right, to help us grow, and then helping educate people, because by giving back, which is the philanthropy and family side, helping others, educating, creating an awesome community, law of reciprocity. How do you think we're going to get to 10,000 units? It's not going to be alone. It's going to be by creating a well-trained community around the country of people doing deals like yourself, and we're helping you do it. And by doing that, great. Now you're going to want to do bigger deals, but you may not be able to do those deals alone. Partnerships. Because if you're going to go take down a $5, $10, $20 million apartment building, do you think you're doing that alone? Probably not. You're going to need 2 or 3 people together. We would love to be one of those if you get to that point. But you got to start somewhere. You got to start somewhere. And that's where this all comes from. Because the community is everything. It's everything. It's all about this. You got to have this. And it's got to be good. so everybody can do deals together.